Hello, welcome back to my YouTube channel. So today I'm going to analyze forecast next week gold forecast for you and next week gold trading. So last week we made massive profit from the gold trading. So you can join with Telegram. Link is below. Join with and make profit from the gold trading. So this is the weekly chart gold. You can see the last week weekly candle is the green candle. Buyers are in under control with the gold price pushed to the upside. Last week's though Donald Trump is the man, so market gold price pushed to the upside. So safe haven demand, so gold is the safe haven. So FX Street website mentions, so gold price surged past 3,350 as Trump tariff threats. So more tariff to countries to last week. So that's the global trade war uncertainty. Gold price pushed to the upside. So that is the main reason for gold demand. So next week, so investors may waiting for the report. This is the US CPI data report. Inflation report is the next week. Tuesday, that the CPI 2.4% is the previous inflation yearly report, and Fed forecast to the increase to the 2.6%. So that's the inflation report increased forecast of Federal Reserve American Central Bank. So that's the Fed watch tool. That's the next FOMC meeting 97%. So almost 100% post rate forecast. So rate hold is still not the rate cutoff price into the market. So more tariffs, so more trade war uncertainties, that the rate hold that will affect to the gold push to the downside. So inflation report will increase next week. That will impact to go dollar demand, and the dollar is strengthened. Some retracement to the gold price to downside. So you should touch with the inflation report next week gold trading. So this is the daily chart goal. You can see this chart, daily chart price is in still upside uptrend. You can see still not breakout to trend, this trend line. So technically price is in still uptrend continuing. So you can see that this trend line, so price several times pushed from this trend line with the daily chart technically set up. So again price pushed to the upside last week also in this area, not break out to the downside. So technically says price is still in the upside uptrend continuing with the gold price. So that's the technically picture daily chart. So strong resistance is there. That's the 3,400 is the strong resistance area with the daily chart. Next strong resistance is the 3,440 is the next resistance area with the strong resistance zones is there. This is the resistance zone. So two strong resistance zones. Price now past the 3,350, so can be pushed to the upside like this. More tariffs uncertainty, more trade war uncertainty continuing next week, that will impact to the goal again, push to the upside like this. So that's the you should touch with the what is the Donald Trump doing also next week if you are trading gold. So that is the Fed watch tool September FOMC meeting. You can see is still not priced into the rate cutoff September meeting also. So September meeting rate post pricing, that will impact to dollar demand other side. So you should touch with this Fed watch tool forecast is still not rate cutoff price into the above 50% price into the market September, but still not increase that forecast. So that will impact to gold some retracement to downside with the dollar demand next week inflation report. So that's the 4 hour chart. What is the technically picture says. So this is the 4 hour chart. So 4 hour chart, I am seeing the pattern, bullish flag pattern. This pattern I also mentioned my last week video. This is the pattern, bullish flag pattern. This is the bullish flag pattern. So this pattern, uh, price break out to the upside like this area, you can see in this point price break out to the upside like this is the bullish flag pattern, and the collect the liquidity to the downside and again break out to the upside. So before continue to the upside can be retracement to this trend line. So next week can be retracement. This is the points I have mentioned. This is the target. So this is the target price. This is the collect the liquidity from the downside area. You can see the last week price collect liquidity from the downside and again push to the upside. So can be target in this area. This is the target. This can be pushed to the this area to the upside like this. 3400 is the next level target with the upside continuing. So this is the resistance area also. This is the 3390. 3400 is the big resistance area in this left side. You can see sorry, the price can be pushed to the like this to this area before retracement, and before it continue to the upside can be collect the downside retracement like this. So this is the strong resistance area, and the next resistance area is the 3450 level. So that's the upside strong resistance area with the technically set up for our chart. So this area price is in now 3350 area also in resistance. Before continuation to the upside can be retracement to the downside like this trend line retracement, and again can be continued to the upside like this. So next week inflation report imported to dollar strength or dollar sell off. This is the downside retracement area 3330, then 3310 can be retracement to the like this before continuation to the upside collect the downside liquidity and again continue to the upside. So that's the my next week goal. So still I am in the buy side goal, but before continuation to the upside, but can collect the liquidity to the downside and some retracement and push to the upside as well. So next week inflation report is the imported. So CPI yearly report, CPI monthly report next week Tuesday. So 2.4% is the current report. The Fed forecast to increase to 2.6%. So inflation increase, that will impact to rate pause increase, that will impact to dollar strength and gold some retracement to the downside before continuation to the upside as well. So that's the next week. Important things is the tariffs, other side is the inflation report. Two economic events important next week goal trading. So price can be more tariffs uncertainty, no retracement to the push to the upside. So thank you very much.